Welcome to our tax-saving video series for tech and real estate entrepreneurs, where you'll discover valuable tips for business growth. With your host, Sammy Basta, CPA.
Are you an entrepreneur managing multiple businesses and feeling the weight of keeping everything organized? What if there was a way to consolidate your businesses and save on taxes at the same time? So today we're exploring the holding company structure. It's a smart solution for entrepreneurs like you looking to simplify and maximize profits. Great. So what's the holding company? Think of it like a big umbrella. This umbrella company doesn't do business itself. Instead, it owns and oversees your other companies. Things like your coffee shop, tech startups, or your rental business, whatever you've got going on. So the question is, why would you want this? Well, let me break it down for you. Number one, protection. If one business hits trouble, the others stay safe. So it's like a shield for each company. Number two, simpler management. Instead of juggling separate companies, you're mainly dealing with one remote control for all your TVs. Third, it's easier funding. Investors might prefer this structure, seeing it's more stable and safe. Number four, tax benefits. So there can be some serious advantages here, which we'll dive into in a minute. Okay, now let's talk about the setup. How do you set this up? Well, you've got two main options. You can either have a holding company as a C Corp or as an LLC. The C Corp is like a fancy suit. Looks impressive, it can sell stocks, lives on even if you step away, but more paperwork work and tricky taxes. Well, an LLC, on the other hand, is like comfy jeans. It's flexible, fewer rules, still gives you liability protection, plus nice tax options. Let's talk more about the tax benefits I mentioned. This is where things get really interesting for your wallet. Okay, the first benefit is income shifting. With the holding company, you can move money between your businesses more easily. This means that you can shift income from a high profit business to one that's not doing very well. And it matters because it can help you balance out your overall tax picture and tax bill. Okay, second is dividend advantages. So if your holding company is a C Corp, it can receive dividends from its subsidiaries that are taxed at a lower rate. In some cases, these dividends, might even be tax-free. And that's more money staying in your business empire instead of going to Uncle Sam. The third benefit is the losses that can offset profit. So here's a big one. If one of your businesses is having a tough year and losing money, you can use those losses to offset profits from your other successful businesses. This can lower your overall tax bill. Number four, the capital gain benefits. When it's really time to get that you have to sell one of your businesses, a holding company structure might help you pay less in capital gain taxes. This can make a huge difference when you're ready to cash out. Also, think about estate planning. So thinking long-term, a holding company can be a great tool for estate planning. It can help you transfer wealth to the next generation more tax efficiently. A big one here, which we hear all the time from our clients, how can I reinvest my profit without paying taxes? That's when it gets really tricky. But with the holding company structure, there's a lot of reinvestment opportunities. So the tax saving you get can be reinvested into your businesses, helping them grow faster without needing outside funding. Now, remember, tax laws are complex and they change often. Plus, every business situation is unique. So while these benefits can be significant, it's crucial to work with a tax professional who can look at your specific case and advise you accordingly. I know this all sounds complicated, and you're right, it can be. And that's why it's super important to chat with a pro, a good business advisor, a good business attorney, financial advisor, and a good CPA who understand the structure before making any big moves. So here's the bottom line. If you are running multiple businesses, a holding company structure could be really a strategic advantage. It could protect your assets, streamline your operations, and maybe even save you more serious money on taxes. Now remember, every business empire is unique. What works for you might not work for another. But if you're feeling overwhelmed, juggling multiple businesses, this could be worth looking into. So the key takeaway here is a holding company structure isn't just about protecting your assets. It can be a powerful tool for keeping more of your hard-earned money in your pocket and your business. And for entrepreneurs like you, the extra cash can really make all the difference in growing your empire. Thank you very much for watching. I'll see you next time.
This has been another episode of our tax saving video series. If you enjoy this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening and have a great day.